Latest data shows Canada is becoming less reliant on the U.S. as a trading partner. This comes as the value of Canada's exports with the U.S. as a share of total exports fell to 67.3% in October, the lowest level on record outside of the pandemic. And let's get some reaction to this from William Pellerin, partner at McMillan LLP. William, thanks as always for joining us.
My pleasure, always.
Let's break down the overall number. What do you think of it? And then we'll turn to the U.S. That share dropping down to 67.3%.
Yeah, so I think we're still seeing, Canada facing strong headwinds and diversifying exports. This is a good first data snippet. If it's driven by one commodity, it's hard to see if it's a broader trend that's starting. Certainly, the Prime Minister and the Government of Canada has been working very hard to push towards diversification into new markets. We know and we hear from our clients that that's a long-term play. Of course, you have to build new customer relationships, go to the trade shows, and do everything that you need to do in most cases to go into foreign markets. So certainly on the commodity side of things, that's easier. These things trade easily. So we're seeing that perhaps with gold. We may see it in other sectors more quickly. So I think a net positive for today, and we'll see whether that's a forebringer of things to come.
And now gold, you mentioned, was a big part of that. What happens if you take that out of the mix? How does it look?
Yeah, that's right. So, we haven't played around with all of the data yet. This just was released, but ultimately, that's what we're seeing is it seems like a little bit of a one-off. Some gold shipments to the United States going to the UK instead. On the overall piece, at least anecdotally from clients, it's not happening yet, that broad-based shift in exports. And in fact, right now, it's more about circling the wagons than anything else, particularly on those Canadian businesses that are exposed to the U.S. market, that have historically been captive to the U.S. market. It's more about survival before we can diversify exports, right? They need to get through this valley where we're seeing clients lose access to the U.S. market due to those sectoral tariffs. For example, in the wood products space, kitchen cabinets and furniture and the remainder in lumber and the like. And so they have to get through this valley before they can even think about, growing the business elsewhere, whether it be Europe or Asia.
And it's a struggle for them, talking about the cabinet makers. Trump saying he's going to defer for a year on that tariff on them. And of course, the wood shipments, the U.S. is their big market. They need it, but also the tariffs are hitting them there, and they don't know how do they make decisions on what to do. I guess this is a tough point for them.
Yeah, it's very difficult for folks in that space. They're really getting hit with a 1-2 punch, right? So you lose access to the United States market because of a 25% tariff. And you're absolutely right. The tariff was supposed to go up to 50% on Jan 1st. For now, it's staying at 25%. That's still a devastating blow. And perhaps the second part, so that's the first punch, is losing access to the U.S. market. But the second punch, and perhaps the one that hurts the most, is we have to remember that the entire rest of the world has also lost access to the U.S. market because of that tariff. And they're looking for a home for their products. And so we're seeing a rapid increase in imports into Canada for products that historically were going to the United States. So whether it be, Malaysian kitchen cabinet manufacturers or Chinese or otherwise, flowing into Canada. And so that's kind of the idea, and seeing that shift in trade flows where Canada is becoming far more attractive at lower pricing in many commodity goods and in many manufactured sectors.
And now you mentioned that valley. Are we still going down into the valley? Are we in the valley, or are we starting to go back up the hill? Does it feel like?
I think it's still getting worse. So now we have the import-export data from StatsCan for October. But remember that the tariffs on wood products that the U.S. imposed went in place only in October. So the November data, the December data, the January data, when it comes out, I think is actually going to show a further erosion of sales and exports to the United States across a broad swath of sectors. Probably the same for steel. And we're going to see a rise in imports into Canada, which will further play with that trade deficit number into November and December. So picture that movement away from the United States because of those sectoral tariffs. And then, we're going to start seeing perhaps a diversification of exports over time for those companies that can make it through the valley.
All right. And for imports, we saw an increase, electronics, industrial equipment as well. Is that a good sign for what our economy looks like?
In a sense, I think most economists would generally agree that if there are massive investments and electronics and the like, it depends on what the numbers actually reveal in terms of those types of electronics. If it's all consumer, then it's driven by the holiday season coming up and the like, then it's not necessarily a major move. On the other hand, they're not necessarily goods that we're making a lot of in Canada that's displacing exports, for example. So that could be a net positive. And if it's for investments into Canada, capital equipment, CapEx and the like, then that's a very positive sign. So there seems to be some bright lights in that data that we're going to be unpacking with clients and seeing what we've seen. But it's a little bit too early to tell. And I think November and December are going to be really the critical months to look at also.
Okay, we'll wrap it up there, William. Thanks as always for joining us. Happy New Year to you.
My pleasure. Happy New Year.
William Pellerin is a partner and international trade lawyer at McMillan.